How many people were doing taxes in 2008? Most of you, that's good. Do you remember that first home buyer's credit? That joke that it was? Because here is a credit, we want it back. And it was only around for a very short period of time. So in 2008, the taxpayer claimed the $7,500 first-time home buyer credit, repaid it from 2010 to 2023, that $500 a year. So far, so good, right? No problem. Here's the thing. The house was foreclosed on in 2013 at a loss. What are the options for the taxpayer to get that money back from the IRS for the overpayment? Jeff?
So we're talking it was paid through 2023, right?
Correct. So 10 years, so that's $5,000.
Well, so the first problem you run into, as we alluded to with the previous question, is your refund statute limits things quite significantly. And you have 3 years from the date the return is due, or 2 years from the date the tax is paid, whichever is later. And so here, we're going to have to go into the facts of the case to see when the tax was paid for those years, to see whether the 2-year rule may come in, since occasionally you have clients who file returns, do not pay, and they have a balance due, and it takes them some time to pay it. So that may come into play here. But realistically, assuming that everything was paid timely, they're really only going to be able to go back 3 years, which is 2021 or 2022, in 2023. So that's either 2 years or 3 years, depending on when you find this and when you count it. And then moving backwards, potentially you have malpractice issues with the prior preparer.
I'm going to argue with you just a little bit, because I just like
That's
to do
what
that.
you do.
But I'm a bear poker. I would say even if the client filed it within the last 2 years and filed all of them at once, I don't know if they're necessarily eligible for it, because I don't think it's a tax necessarily paid. It's a repayment of a credit. So I think we have an issue there.
Would it potentially, there's the, gosh, if I know these numbers, these form numbers, I'd be great. But there's the form for penalty abatement.
843.
Isn't that also for denied credits?
But were they denied?
Anybody know?
We're working backwards.
Yeah.
Yeah.
I mean,
They were given
maybe
the
if,
credit
as an option.
All they can say is no, but I mean, I just don't think that credit is necessarily a tax, but then is it a credit
That's my
obtainable?
angle. I don't.
If they filed them timely, then it's a mute issue. You'd go back to 22 and 23 and get that back. 21 would have expired.
Well, here's another thought. I mean, again, we're talking, what did I say? It's $5,000, right? Potentially we can get $1,000 back. 2 years are still in statute. So potentially we get $1,000, there's $4,000 left on the table. Would it behoove the taxpayer, and maybe it's something that in your ethics class the other day, the three of you talked about contingency.
Contingency fees.
Contingency fees, but would it maybe take a chance for this taxpayer to say, okay, let's put it out there, let's ask for the other $4,000, and then if it got denied, again, since we're doing this credit with the 843 work, because now we're dealing with a denied credit. I'm just throwing that out there. We have a hand raised, and if you'd like to go to the microphone, I'll be happy to take your question. But if you don't go to the microphone, I'll get yelled at. There's one in front of you too, but that's okay.
You need extra steps, or I'm close on my steps. Okay, walk around there.
Go to the restroom one more time and get your steps. They're all the way down the other end of the building.
So I had exactly the similar.
Hold that up, please.
Okay.
Hold it up. There you go.
Can you hear me?
Yes.
Okay, so I had exactly the similar situation in which I had a client. They claimed first home buyer's credit. Now, after 3 years, they foreclosed it because the husband who purchased the home, he passed away. So the wife couldn't afford it, foreclosed it. But here's the neat thing: they were still paying the $450, the credit back, even after 7 years after they foreclosed on that home. So I called up the IRS and I said, I don't think so. They should be paying it back because, first of all, they did not get any proceeds back. The house foreclosed. So she was also very confused when I called the IRS.
Shocking.
She didn't know either.
Well, nobody really knew that because that was such a bizarre credit to begin with. But what did you find out from the IRS after you unconfused her?
So she said she will get back to me, and that was 6 months ago, and I called her back again, and no answer.
Yes, that I would keep on trying, but again, I think the only option I can think of at this point, because whether it's a credit or whether it's a tax, it's tough, and the 843 works for a credit that's denied. So if you're going to try something, shoot to get that money back, but you'd be filing amended returns for each one of those years. They will not get processed because of the fact they're out of statute. And that then by each one that comes in, you'll be doing a separate 843 for each one of those denials.
The interesting part, I think, on this question, I believe, is the preparer was the same preparer that did the foreclosure, but then when the new tax preparer, they noticed that. So that would be another thing to go back to the previous preparer and say, you took $500 you didn't need to from the client, and then again, the litigation process begins, and you got to outweigh cost of the attorneys to what we actually have in front of us.
I mean, we're dealing with a single mother who has like 2 children that she's feeding, and then it's not worth the cost of litigation, and it's $400 a year. How much she can afford,
No,
That is really what we face an awful lot of times. There's certain things that we take on pro bono, but Karen Hawkins, everybody remember Karen Hawkins?
Yes.
Karen Hawkins came to my local chapter's luncheon meeting and gave us an ethics class, and she made a comment that has stuck with me all these years. Pro bono is our choice, not our clients'. So we have to decide what battle we want to choose. And I'll give you an example of a battle that I wanted to go after. And my client said that he wouldn't do it. He wanted the case over with. But I had an auditor assess $600 of additional income because on $8.5 million of deposits, my client could not establish where that $600 came from. Yeah, AJ's making his face like, I can't believe that.
No,
But
I can believe it.
I went to the manager, and the manager says, I can't change his mind. I know he's being ridiculous. I was ready. I said, I want to take this to appeals. And my client, I said, I won't charge you because it's not worth it. My client said, Alan, I really want this over. I said, let's just bifurcate the audit. I'll just take this one issue to appeals. I was that adamant about it.
I feel
but really, we have to choose what we'll do. Obviously, this client could afford it. It wouldn't make sense. Financially, it didn't make sense to pay me to do that. But pro bono is something we have to decide. And there's times that we want to do that. But remember, how many of you are have a nonprofit business? Choose pro bono wisely, because we have to be careful not to get caught up in the emotions of our clients' situations.
Tax Talk Today, the tax show for the tax pro, is the innovative educational program presented in collaboration with the IRS, designed exclusively for today's tax practitioner.
There's various loss limitation rules we need to be aware of when we have a business activity.
Each program features in-depth panel discussions with key IRS executives and leading authorities from the tax practitioners community. Tax Talk Today features real-time interaction. Innovative and easy to use, Tax Talk Today is the only program that brings the IRS directly to you. Tax Talk Today can be viewed in large groups in the office or from the convenience of your home. To get continuing education credits for watching a program, purchase your CPE credits today. Tax Talk Today, the tax show for the tax pro.